Hey everyone, and welcome back to Investing Talk podcast. Today we're going to be looking at LendingClub, ticker symbol LOC. They've been making some noise lately, hit a 52-week high. And I know a lot of you are wondering, is this the start of something big or just a flash in the pan? What do you think?
Well, that 52-week high of $17.17, it definitely got people's attention.
Okay.
Almost double the stock price from a year ago. But the real question is, what's driving that growth? Is it sustainable?
Exactly. Anyone can have a good week, right? But I'm seeing some interesting things in their recent performance, especially that Q3 2024 earnings report. Revenues up 8%, loan originations up 6%. Not too shabby.
Those are solid numbers for sure.
Right.
But it's more than just good figures. What really caught my eye is how those numbers break down. LendingClub's core business is personal loans, and that segment is strong. But they're also expanding into auto refinancing, which is a huge market with lots of potential.
Okay, so there's more to the story than just the top-line numbers. It's about where that growth is coming from. And to your point about future potential, LendingClub is even projecting continued growth for Q4. That has to be exciting for investors, right?
Absolutely. When a company projects strong future earnings, especially in a somewhat uncertain market like we have right now, it signals confidence. It tells investors that LendingClub believes in its strategy and its ability to execute.
That makes sense. But I've noticed that not all the analysts are completely on board. For example, JP Morgan downgraded their rating to neutral. They're saying the stock is fairly valued at the moment.
JP Morgan's being a bit cautious, and that's fair. Their analysis emphasizes the long game. LendingClub is making some big moves, like their recent acquisition of Tally Technologies' intellectual property, which we'll get into later. JP Morgan seems to be saying, these moves are smart, but they'll take time to pay off.
Interesting. So not necessarily a sell signal, but maybe a hold for now. But then you've got Maxum Group, who are singing a very different tune. They actually raised their price target on LendingClub to $19. They're clearly seeing something they like.
Maxum Group is definitely more bullish. And I think their optimism is tied to a couple of things. First, the Tally Technologies acquisition. LendingClub is getting into the credit card debt management space, which is a massive market. Second, LendingClub is showing a knack for managing risk. Their current ratio, a key measure of financial stability, is an eye-popping 6.66. That's a huge sign of strength in a volatile market.
Well, hold on. A current ratio of 6.6? That's incredibly high. I have to admit I'm a little skeptical.
Yeah.
Does a high current ratio really matter if their new venture into debt management flops?
That's a great question. And you're right to be skeptical. It's not a guarantee of success. But think of it this way. In a choppy market, investors look for safe harbors. That high current ratio means LendingClub has a lot of liquid assets. It gives them flexibility, a cushion to weather any storms. Even if the debt management venture faces headwinds, they have resources to adapt and adjust.
Okay, I'm starting to see your point. It's like having a big safety net. But let's talk about that Tally Technologies deal. Credit card debt management is a pretty competitive space. Are you really convinced this is going to be LendingClub's big bam moment? Like when Amazon bought Whole Foods and everyone was like, wait, what?
Well, it's definitely a bold move. And remember, the credit card debt market is enormous. It dwarfs the personal loan market. If LendingClub can successfully leverage Tally's technology and expertise, they could tap into a whole new level of growth.
All right, you've got my attention. But color me intrigued, not convinced just yet. I need to hear more.
That's fair. It's important to be cautious. And that's exactly what we're going to do. Break down this acquisition, explore the potential risks and rewards, and see if LendingClub really can become a major player in this space. So let's dig deeper into this debt management market. It's a beast, worth billions of dollars, and it's only getting bigger as credit card debt levels rise.
Okay, billions with a B. Now, that's a market worth fighting for, but it's not like LendingClub is strolling into an empty playground, right? Who are the major players they're going up against?
You're absolutely right. This isn't a cakewalk. You've got established companies like Intuit with their Credit Karma platform, and then there are a bunch of smaller, more agile fintech startups, all vying for a piece of the pie.
So it's crowded, it's competitive, and I'm guessing it's cutthroat. What makes LendingClub think they can actually stand out in this crowd?
That's where Tally Technologies comes in. Remember, LendingClub didn't buy the whole company, just their intellectual property. That IP includes algorithms and technology that help people manage their credit card debt more effectively. Think personalized recommendations, automated payment strategies, the works.
So it's about bringing something new to the table, some secret sauce that the others don't have. Okay, I'm starting to see the potential here. But let's not forget the market backdrop. 2025 is off to a rocky start. Lots of uncertainty about interest rates and the economy. How does that factor into LendingClub's strategy?
It's a crucial consideration. Higher interest rates mean higher borrowing costs, which could impact loan demand. But here's where lending clubs focus on prime and super prime borrowers, people with good credit scores, becomes a real advantage.
Hold on, explain that to me. Why would their focus on borrowers with good credit be an advantage in a rising interest rate environment?
Think of it this way. When interest rates go up, lenders become more cautious. They're worried about defaults. But Lending Club, with its focus on borrowers with strong credit histories, is less exposed to that risk. These borrowers are more likely to repay their loans, even when rates climb.
No, okay, that makes sense. So they sort of insulated from some of the broader market turmoil.
Yeah.
But even with a strong borrower base and fancy new technology, there are always risks, right? What are the potential pitfalls investors should be watching out for?
Several things. First, integration. Bringing Tally's technology into Lending Club's platform smoothly is key. Any hiccups could delay their entry into the debt management market.
Yeah, merging technology is never a seamless process. What else?
Competition, of course. The debt management space is fierce. Established players have deep pockets and brand recognition. Lending Club needs to execute flawlessly to gain market share.
All right, so execution is critical. And I'm guessing there are also regulatory hurdles to consider, especially in the financial services industry.
Absolutely. The regulatory landscape for debt management is complex and constantly evolving. Lending Club will need to navigate that carefully to ensure compliance and maintain consumer trust.
Okay, so we've got integration risks, fierce competition, and regulatory hurdles. It's starting to feel like a tightrope walk. But let's flip the script for a moment and talk about the potential upside. If Lending Club manages to pull this off, what could the future look like for them?
That's where things get really exciting. If they successfully integrate Tally's technology and navigate the competitive landscape and keep regulators happy, they could become a dominant force in the debt management market.
Dominant force. I like the sound of that. But what would that actually mean for investors? More specifically, for someone like me or our listeners, thinking about adding Lending Club to their portfolio.
Well, if Lending Club can achieve significant market share in debt management, their revenue and earnings could skyrocket. That would translate into higher stock prices, potentially much higher. We're talking about the possibility of turning a decent investment into a real home run.
Okay, now you're talking my language. But as we've discussed, there's no such thing as a sure thing in the market. So how do investors like me weigh the potential rewards against the risks? What should we be watching for to make an informed decision?
The next few quarters will be crucial. Pay close attention to how the Tally integration is progressing. Are they hitting their milestones? Are they attracting new customers?
So basically, are they walking the walk, not just talking the talk?
Exactly. Keep an eye on their earnings reports. Are they showing growth in their debt management segment? Are they maintaining their strong financial position?
Solid advice. Any other red flags or green lights we should be aware of?
Keep an eye on analyst ratings and price targets. Are they trending up or down? And perhaps most importantly, listen to what Lending Club's management is saying. Are they confident? Are they transparent about challenges? Their words can offer valuable clues.
Okay, I'm taking notes. This is really helpful. You painted a picture of a company with a lot of potential, but also some significant hurdles to overcome. It's a classic high-risk, high-reward situation.
Precisely. And that's what makes investing so fascinating. It's about weighing those risks and rewards, doing your homework, and ultimately deciding if the potential upside justifies the inherent uncertainty.
Well said. I think that's a great takeaway for our listeners. But before we send everyone off to do their own deep dives into Lending Club, let's take a step back and recap the key points we've covered today. We started by looking at Lending Club's recent performance. You know, that 52-week high, $17.17. It really got everyone buzzing. But then we kind of dug a little deeper, realized it's not just about a hot stock. It's about understanding, the underlying business.
Right. Their Q3 2024 earnings report showed some impressive growth. Revenue and loan originations are both up. But what really matters is, the strategic direction. They're not just sitting back, resting on those personal loans, expanding into new markets, like we talked about auto refinancing. And now with the Tally Technologies acquisition, credit card debt management.
Yeah, the Tally acquisition. It's a big gamble, right? The credit card debt market is huge, but also incredibly competitive. We talked about some of the major players they'll be up against, like Intuit, and then all those fintech startups.
A lot of hungry startups out there. Lending Club is betting on that Tally technology, hoping those algorithms, personalized recommendations, that'll give them an edge. But integration is key. They need to bring that technology into their platform quickly.
And seamlessly.
Yeah.
Oh, and don't forget the market backdrop, right? Things are a bit shaky right now. Interest rates are rising.
Yeah.
Economy's a little uncertain. Makes you wonder, can LendingClub really pull this off?
That's the million-dollar question. And the answer, it depends. LendingClub has some things going for it. Their focus on prime borrowers gives them some insulation from interest rate risk. They have a strong balance sheet, that sky-high current ratio we talked about.
But there are also those red flags. Integration challenges, fierce competition, regulatory hurdles. It's a high-risk, high-reward scenario. Classic investing talk material, wouldn't you say?
Yeah, absolutely. That's what makes it so exciting. As investors, we have to weigh those risks and rewards. Do your homework. Watch for those key indicators. Earnings reports, management commentary, analyst ratings.
Right. And at the end of the day, we need to decide, is LendingClub a buy, a hold, or a pass?
Right.
There's no easy answer. But hopefully this discussion has given you some insights you need to make an informed decision.
Investing is a personal journey. What works for one person might not work for another. The important thing is to understand the company, understand the market, and your own risk tolerance.
Well said. And that's what Investing Talk Podcast is all about, giving you the knowledge and insights you need to navigate the world of finance. So be sure to subscribe to the show, share it with your friends, and leave a comment below. We want to hear your thoughts on LendingClub. Think they can become a major player in the debt management space? Let us know.
Thanks for joining us, everyone. Until next time, happy investing.